Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Name it.
Yeah, in fact, I want to jump into the college planning right away because we don't have too much time left, and I think there's some really important stuff here, Chris.
Okay. Here we go, shut me up again.
Yep, well, I have to. Someone's got to do it.
Yeah, so we were talking a little bit about, getting financial aid, the importance of having the ability to use it as an option. So key pieces to think about. There's assets. When you fill out the FAFSA, it's a free application for federal financial aid. And there's a formula that they use to determine basically what they're looking at is what assets do you have that you should use for college before they're willing to give you any kind of financial aid. So there's three key categories here is 20% of a student's assets are going to count against you for financial aid. Okay. Now, when you compare that to a parent's assets only count against you 2.6 to 5.6%, and that depends on their income. So the first takeaway here is better to have assets in the parent's name than in the student's name.
I like that a lot.
So, which is important. So there's an account out there called a UTMA. It's a Uniform Transfer to Minors Act, and it has some tax benefits to it, but it shows up as a student's asset. So you have to be careful and don't get lured in by the tax benefits of the program and put all your money into these UTMAs and find out later that they're going to count against you. 20% of those assets are going to count against you for financial aid. The third, and actually my favorite, Gino, is the ones that don't count at all. The ones that don't count at all are things like qualified retirement accounts. So your IRAs, your 401ks, 403bs, so on and so forth. Annuities don't count against you.
Okay.
Yeah. Life insurance assets, equity in your home, and family-owned business. So all of these assets are places that you can pile money that's not going to count at all against you as far as the financial aid is concerned.
So that's all. Those are all really good tools to utilize, but the fear is, can I access those tools? Those sound like they're all locked up to me.
Excellent question. I mean, did we plan this out? You led me right into the next point.
That might be a gold star.
Yeah, I think you do get a star for that. So you're right. A lot of those assets, you look at a 401k, if your money's all in your 401k, you have to actually take a loan out on your 401k, and you can only get so much money out of your 401k, and there's some issues with that. So if all your money's tied up in your 401k, yeah, it doesn't count against you, but you can't necessarily use it for college, or it's difficult to do so. But there are some of them that do function in a way that can exclude those assets, and you are still able to use them for college. So let's look at a couple. One is a Roth IRA. So a Roth IRA, I always tell clients, if you're not saving for college yet and you're not saving for retirement yet and you don't know which one to do first, start with the Roth IRA, because the Roth IRA, you can put money into your Roth and you're able to pull that money out penalty-free prior to the age of 59 and a half if those funds are used for higher education purposes. So if you put money into your Roth IRA and you end up needing them for college, you can access that money. If your kid ends up not going to college, then the money stays in your Roth IRA and it continues to grow until you use it for retirement in the future. So in a sense, you're killing two birds with one stone.
That's a great tool because, I mean, that's what, like I said with my kids, I'm like, well, look, I got 3 kids. Probably all of them won't go to college. Some might not. And so I don't want to lock it all up for college savings. So what do I do if I put it all in a 529? Then I can't get to it for anything else, right?
Well, you can get to it, but yeah, I mean, if you pull money out of a 529 for something other than college education purposes, you're subject to a 10% penalty and you're subject to taxes on the earnings. So yeah, you can get caught up in, I have too much money for college. And, there's some penalties for getting to your money if they don't go to college, where a Roth eliminates that issue. So start using your Roth and know that it's there for college if you need it. Now, if you're maxing out your Roth and you're looking for other places to put money, a couple of different options. Annuities are a little tricky. You can put money into annuities. Now it's excluded as far as, financial aid is concerned. But annuities typically have some kind of a surrender charge period, and there's some tax issues changes when you pull the money out. But as long as you plan it out, if you think about it far enough in the future and you know that you're not going to need the money for college after that surrender charge period is over, and you're comfortable with the taxes that you have to pay when you pull the money out of the annuity, it can be a good way to stockpile some money for college. One of my favorites, though, is life insurance. So life insurance, if you need life insurance, you can put money into a life insurance policy like a whole life policy, and it builds up a cash value within the policy. That cash value can grow based on however the money is invested within that life insurance policy. And when your child gets ready to go to college, you can access the cash value through what's called a loan of the cash value. So if you are basically borrowing money from that cash value, you don't pay any taxes on the money when it comes out. It essentially comes out tax-free as long as you don't lapse the policy, and you can use that cash value or those funds to pay for college. In the meantime, while the money's in the life insurance policy, it's excluded from financial aid, so you don't have to worry about it counting against you. And in the third event, in the worst case scenario is, God forbid, something happens to you prior to your children going to college, the death benefit is going to be there and available to pay out to your spouse, your surviving spouse, or the guardian of your children, and that money can be used to fund college education.
A triple whammy.
In a horrible situation like that. Correct. So life insurance can be a great tool for planning for college. And, I'm throwing these out. It's our last segment. It's a lot of information.
Yeah.
So the most important thing, I say this every time I'm on the show with, whatever we're talking about. But the most important thing is that everybody is so drastically different. There's income limits on Roth. There's issues with the life insurance. No one solution is perfect for everybody. So you need to sit down with a professional, make sure that they understand your situation, and then have them map out what is going to be the best investments for you to use in order to save for college education. So it's really about making sure that you know all of the options that are available to you and using the ones that are absolutely best for you, not best for your neighbor.
All right, if you just tuned in, always great information from Chris Ingram with Ingram Financial Solutions, our chosen financial planner on the Don and Gino Real Estate and Finance Show and America's Professional Resource Group. Chris, I love, one, I know you ask the right questions. And if you notice how calm, cool, and collected Chris is, there's a reason for that. When you become a true professional, it's not about emotions. It's about planning. It's about asking the right questions and finding out the real goals and scenarios of the individual so that you can put a plan of attack. When you're a professional, and like Chris is, he's got years and years of experience, you learn to be calm, cool, and collected and just ask the right questions to prepare the best plan. Thank you for doing that for our listeners. Thank you for doing that for our clients and joining us on the show as always. You do a great job, Chris.
Yeah, Chris, I just want to make sure, as you said, they need to get a hold of a professional, so I can't think of anybody better to reach out to than you. So how do they do that?
I appreciate that. Go to my website. It's ingramfinancialsolutions.com. Has all of my contact information on there. You can email me from the website. It has my phone number on there. Best place to go. Find out a little bit about me. You can see a picture of me.
He's
all
a
that
good-looking
fun stuff.
dude.
Don't lie to them.
No, I'm glad I'm not going against you in the competition, Gino.
I'm glad I'm not going against Gino. He's, look at him.
I know. So thank you for tuning in again every Saturday, 9 a.m. on the Don and Gino Real Estate and Finance Show, sharing with you what you need to know, want to know, and should know about real estate and finance to help guide you to personal financial wellness. Thank you, Pam Ingram, for sharing great information about real estate and what's really happening today. And we thank you for joining us. Again, you can find all our information at donandgino.com. Donandgino.com. Check out our National Real Estate Post, the National Real Estate Cafe, and make sure you tune in daily, 9 a.m. and 7 p.m. to donandgino.com to re-listen to this great series of events. Thank you, our friends, and have a great weekend.